What's up, Capstone family? This is Ed with Capstone Realty coming at you. I hope you are doing well on this Friday, the 22nd of April, 2022. It's a time for another amazing weekend here in Arizona, and I hope you get to get out and experience wherever you are. This week was definitely an interesting week. Had some really good opportunities to connect with more people in different industries and in different capacities, and saw things through maybe through their lens instead of just my own this week compared to most. And I got blessed to be put in a room of some very interesting, higher caliber people. I was definitely low man on the totem pole, and really learned more about where a lot of these other industries are and where they see the market going, both now and in the future. And prior to that lunch today, I had some conversations with some other people that value and trust and find them, I consider them leaders in their space and experts in their space. And this week we started seeing the rumblings and the fallout from interest rates going up so quickly. And I don't want to say I was blind to it before this week, but I really didn't pay as much attention to it because it wasn't impacting us as much where we sit. A lot of you, you still own real estate, and a year from now, you're still going to own the real estate that you do. This time last year, we were helping a lot of people exit the market, get out of the market, and arguably, looking at the numbers, the demand for property versus supply was the highest it's ever been last March. It was the highest it's ever been in Phoenix for this supply demand index that we look at called the Cromford Report. And I look at this year and a lot of the conversations that we're having, there aren't a lot of options when you sell real estate right now and where you're going to put that money from a tax shelter standpoint, and where you could take that money and put it elsewhere, knowing that you're going to get equal or better of a rate of return than what you have on your real estate. Especially, the last couple of years here. It's been not only nuts from the standpoint of how much equity do you have, but also, what rents have done. It's just, it's almost, I don't even know what to think about it. We're still trying to figure out, what we do moving forward. But I think ultimately, the supply and demand right now, we saw and we're seeing a little bit of demand pulling back. I have someone I really trust on the multifamily side, and this week, Dan mentioned to me that they're seeing, and what he thought was, we're not going to start seeing confidence again in certain spaces until we see a leveling off of the interest rate. And knowing that there is more interest rate hikes coming here this year that has been put out by the Fed, letting us know that that's what their intent is, it puts a lot of people at a very uneasy space and wanting more to hunker down and hold on versus opportunity and see what's moving and see what's happening in the market moving forward. So I thought that was an interesting conversation, and it led back to us really looking at, hey, what's happening in our space right now? What are buyers doing? What are sellers doing? And buyers have all but dried up. And realistically, if you're out there looking for real estate product right now, it's a tough go. It's very, very, very hard. We're also seeing some of these institutional buyers starting to not necessarily back out of deals, but we're starting to see them slow down and how aggressive they're being in what they were offering. And again, I think that ties into the rents, right? We've seen this rent stabilizing, starting to flatline a little bit as to appreciation in rents. And I think that that's all related. You can't go at this pace forever and continue to push this market up on the sales side unless you're getting money to pay and to show the investors that you're doing what you're supposed to be doing, right? So I think that's what we're starting to see there, which means that, as demand continues to wane because interest rates have shot up so much. I mean, if you haven't looked at interest rates lately, we helped a family get into a property at the end of December. They were still able to lock in the twos, and now if they were to buy something, they'd be in the fives. Like, that's insane. That's a completely different house for them. So that's the market that we're in right now. That's what we've been seeing. Couple of takeaways that I got from today that I wanted to share because I just thought it was so important. Again, sitting in a room with some very, very interesting people who all are owners of businesses in their own space. And a lot of these businesses, all of them in the room were significantly doing significantly more business than we are and have been around for longer. One person in particular mentioned the amount of construction that's happening here in Phoenix on the commercial side this year versus any other year. Any other year, he said that it averages 9,000 to 10,000 square foot under construction at any given time here for the year, right? And this year, he was talking about that quadrupling, right? We're at 35 to almost 40,000 square feet. And it's like, wow, that's a lot. That's, he's talking about the millions of square foot under contract that they're going to be doing in a year. And it just seemed like, okay, now we're starting to catch up on this new wave of how much is being built, but what is going to happen with these interest rates, and how is that going to affect people moving forward and buying property moving forward? So definitely something to think about. I think also right now, what's interesting with Taiwan Semiconductor, it sounds like that's arguably one of the largest construction projects in the country right now. So if you're looking to do anything out here, from redoing your concrete at your home, like they're taking a lot of those resources. They've got 500 iron workers out there every day that are doing work. And it's like that place is just absorbing a lot of resources that we don't have. Another thing was, again, that we've been talking about lately, the supply for air conditioners and what that's going to look like through the end of the year. Today, someone in the room reaffirmed that, as they have a very, very strong pulse on what's happening in that side of things. And they let us know, like, hey, yeah, if you're looking to get AC units, this is the year that it's going to be probably the hardest, which was, interesting that we've been hearing this, but now the source has basically told us the same thing. So, again, I appreciate you all watching. Definitely not a darker week in real estate here in Phoenix, but is definitely, it definitely corroborates what we've been thinking. And hey, I'm glad we're doubling down on the property management side this year. Again, from a sales side, things have slowed tremendously. We built this business from the beginning on sales. I was always selling real estate. I was, a realtor. I loved that part of it. But now as we've evolved, the future for Capstone is really helping people through this process, education through options in real estate, and giving people those options, and then letting people really understand the why behind them, giving you more information than your neighbor does with the next property management company, right? Because with that property management company, they're not getting the same level of service. They're not getting the same level of customer. Things that have affected us this year, just so you know, just really quick, things that really changed for us over the last couple of years, maintenance was probably the biggest. And you've heard me complain and challenge the maintenance process forever since I've been doing these videos. But really, COVID kicked that off it just became a very, very, very hard place for us to know, even with the best vendors that we have, from one day to the next, you didn't know if they were going to have the bandwidth to be able to show up on our jobs. Hence the reason why we started Valley Handy. Happy to announce that it's been a full year since Josh has been with us on the Valley Handy side. If you look at his reviews, the guy's crushing it at 4.91 stars on reviews, and I'm happy to say that the reason why he didn't get those other 5 stars weren't necessarily Josh's fault. Sorry about that, Josh. But again, systems and processes that needed to be worked on that we've since corrected, and now we're rocking. And Josh does an amazing, amazing, amazing job. If you haven't had the opportunity of having him go out to your house yet, you'll be impressed. Like Josh is the real deal, and we are blessed to have him on board on the team. Thank you so much for watching. Look forward to connecting with you again. There's definitely some interesting changes that are coming here to Capstone that I think are going to add just tremendous value. And one in particular that I think will be a game changer to how we're filling properties. Wait for it, and as I roll that out, you'll see, wow, that is definitely needed in the space right now. And if it goes off like we expect it will, we'll definitely be able to help a lot more people. Appreciate you. Thank you.